Hey, good afternoon, everybody. Going to go over our trades for today, April 9th. This is Thursday. Excuse me. Three full scalp trades. Pulled out 18.1 pips. Pretty good morning and pretty good evening last night. Nothing great, but we chiseled away to grab the 18 pips. So we'll take it. First, let's go over some economic data. Yesterday afternoon was the Fed minutes. Came out at 2 p.m. Eastern Standard Time. Really showed it really showed that the Fed is pretty split on what to do. Granted, these minutes were before the non-farm payroll from last Friday that missed so miserably. So it sounds like the people in the Fed meeting that want to raise rates later in 2015 or even put them off to 2016 are probably gaining more traction after Friday's number. But again, these minutes were before that announcement. And what those minutes showed was that the Fed officials, they were favoring a liftoff of interest rates later in 2015 rather than earlier. They were citing the dollar, oil, China, Greece, things that we know. There were still some that were looking for June. It was split not quite evenly. It was a little bit more heavily favored towards later in the year, but there were still some of those Fed officials looking for June liftoff of interest rates. And it said almost all the Fed members were citing risks from overseas. Obviously, Europe is in such bad shape, and China has been slowing down dramatically. And then last night we learned that the Swiss government has, for the first time ever in the history of since bond yields have been tracked by mankind, the Swiss government has gone to negative interest rates on 10-year paper. Now, there have been some governments, including the Swiss, Germany, several other countries over there, have gone negative on shorter paper, 5 years or less. This is the first time ever a country went negative interest rate yields on as far out as 10 years on paper, which is just absolutely staggering that could happen. And we even have a graph of it showing that the yields have gone negative. I mean, it's just amazing that institutions or individual people would invest in government paper and theoretically have to pay them to hold the money every year. Granted, it's a very small amount that it's gone negative, but it's in fact negative. So it's insane. It's obvious that central bankers around the world don't want stock markets all around the world to come down. Because when you go negative, I mean, it's bad enough putting money in paper and getting under 2% for 10 years. You go negative. Where else are you going to put your money? You're going to put your money in equities. You're going to put your money in currencies. Obviously, people aren't putting money in the real estate. I mean, that's been lackluster at best, real estate. And now that the some big hedge funds have stopped buying real estate, we're starting to see the real estate market come in. So it's obvious that the central bankers are relying heavily on the stock market. They don't want stock markets to really come in too much. We'll see. I mean, I don't think that's fueling economies. Doesn't seem to be, right? Let's see. That's pretty much about it as far as the news headlines. There was initial jobless claims, but that was this morning. Comes out every week. It's really not that big of a number. It was actually pretty much in line, maybe just a hair better. But it's really a number that you can only give so much credit to because it's a weekly number. So let's get to our trades. We had, like I said, 3 trades, pulled out 18.1 pips. First, this one was from last night. We were long Australian dollar, Japanese yen, 92.196, a full scalp. Just grabbed a quick 6.4 pips. You can see what it did. It looks a lot easier on a 30-minute chart. Again, when you're doing pure scalp, you're going to do them on 5 minutes, maybe a 15-minute chart. So it looks a lot easier, but obviously, it went. It looked like this level here, these bottoms could act as these bottoms here are support for this consolidation range. It kind of seemed like maybe that could act as resistance, but obviously it proved us absolutely wrong as it just took off. And then euro yen, we had 2 trades this morning. We had the first one, a signal to go short 129.171. Again, we give these signals for traders to have ample time to put the positions on. It was pretty easy. If you looked at a 5-minute chart, you see these tops here and these tops from earlier overnight. clear indication there's going to be a problem there. Long-term trend on the euro is down. We know that. So we get the signal to go short. It was pretty much a no-brainer. Picked up 6.1 pips. Did come in a little bit harder after we covered only by maybe 4 or 5 pips, and then bounced. It came right back up to that level again. And once you could see the buyers drying up, we got the signal to go short again. We got triggered to go short 129.158. Covered that one at 129.102. Picked up 5.6. Again, looks a little bit easier here on a 30-minute chart on this big down move. But on the 5-minute, you knew you covered at 129.11. It did trade as low as about 129.08. And it comes right down after we get short pretty quickly, right down to 121.10, 129.10, 129.9, like that, back and forth. You got to make your decision. Do you cover and pick up the 5.6, or do you hold and hope it doesn't reverse on you, go back up here to break even or take us out and we go a loss? And if it does take out this level, this 128.08, 128.07 level, is it going to make a move down to the figure? Well, we covered, and sure enough, 15, 20 minutes later, half an hour later, it made a move to the figure, got to the figure, hung around the figure for about an hour or so, and then busted down. But again, they're just big, full out scalps, so you're only looking to make grab whatever you can grab on it. So we'll take it. 3 trades, 18.1 pips, so we'll move on to tomorrow. And we'll go from there. We do have a swing trade in euro yen. We're basically flat on that. We were down a little bit. We've been up a little bit, but pretty much flat on that. We're going to keep our stop on that tighter than we think, I believe. So we'll adjust that. And that's it. We're going to wrap it up. If you're still trading now, good luck. If any signals come out, they'll be coming your way. And if we get any action, we'll do a video again tomorrow. Have a great rest of your day.